大会主席先生，世界卫生组织总干事先生，各位代表，首先，我认为，在人类抗击新冠肺炎疫情的关键时刻，举行这次世卫大会具有十分重要的意义。人类正在经历第二次世界大战结束以来最严重的全球公共卫生突发事件。新冠肺炎疫情突如其来，现在已经波及210多个国家和地区，影响了70多亿人口，夺走了30余万人的宝贵生命。
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent day today. I know we are having yet another red day in the markets. We have had even more FUD from China. We are going to talk about that in a little bit at the end of this video. As you can see right here, it does appear as though Bitcoin is trying to set in a bit of a base. However, I'm going to let you know exactly how I feel about whether or not we should be feeling confident on the bounce yet. If we do need to look for some of those lower levels. I know in my previous videos, some people were upset about the fact that I was still short-term a little reluctant on the bullish bounce. Now, it doesn't mean that I have become a Bitcoin bear. It just simply means that I want to see more of a base get set in. So in today's video, I'm actually going to talk about a little bit of the positives. I do want to let you know a specific area where if Bitcoin was to have a retest, I would become a lot more positive on the Bitcoin price action, and especially for a lot of people who have had a bit of a tough week. We've all had a tough week, having 50% of our portfolio essentially get slashed in half. I definitely recommend you stick around all the way to the end of this video. I have a really great clip that I think a lot of you should watch, and it's definitely a lesson to be learned, especially if you are new in the crypto space. But you know what? Even if you've been around for a few years, it still helps to just be reassured, right? And also for everybody that was complaining about the fact that my video from yesterday was banned in a few countries because of copyright clip, I did re-upload that video, so I did put it on a private video. If you're one of those people who didn't get a chance to check my previous video, check the link below in the description. I re-uploaded it without the copyrighted content, so you guys can check that out, all right? So that is below in the description, but we're gonna make today's video super quick. I know, famous last words, right? I'll try to get through this as quick as possible. So if you're not subscribed, definitely consider it. And obviously, fear and greed index still down at around 14, but we don't need an indicator to tell us that there's fear in these markets, right? So let's dive in and let's have a look super quick. Now you can see right here that although we have continued to go lower, we are actually putting in higher wicks, right? So we're having a lot of buying coming in on these dips, right? Presumably the institutions, we don't really know, but you can see right here, we had this massive wick from about pretty much $30,000 even, and we closed that all the way up at 37, and every subsequent wick that we've had that falls down does seem like we're wicking higher and higher. So we are seeing sellers coming in, stepping in, and buying these dips. So that is something that we can take away as a positive, but what we do need to look at is the fact that we are looking at these trends, right? The trend is our friend until the end, and we did break our uptrend, and currently right now, we are in fact putting in lower highs. You can see every single high we put in is lower and lower, and the same with the lows. We just keep putting in lower lows, this crazy low down here, and these two lows as well. Now, keep in mind, we are still bouncing in the channel, so Bitcoin is, you know, sort of respecting this downwards trend. I do expect at some point we break through this resistance, but keep in mind we do have a lot of these moving averages overhead, and it is going to be a battle for the bulls to break above these levels. We've obviously fallen below the 200 daily exponential, and we fell below the 200 daily itself, which is this line right here. Now, it's very critical, as I said in my previous video, that we get back above these levels, right? These are sort of what traditional analysts look at in an asset to say, hey, we're either in a bear market or we're in a bull market, right? But the thing is that we've actually seen something similar happen to Bitcoin, kind of like what's happening right now. that I do want to go over in just a minute if you guys do stick around. But having a look right here, let's look at the CME futures, right? A lot of people tend to discard this chart. They don't really care about the futures. Well, believe it or not, my friends, although that this is a cash settled business, it is very important in assessing the structure of the charts. And you can see that we did close at around $35,280 for CME futures. So obviously it is the weekend. Trading on weekends, especially during this time, could be very risky, and I would not recommend it. However, I will let you know what I'm looking at specifically. So there is that possibility, of course, that we do bounce all the way up to here and close this CME futures gap right around $49,000. We do have a very long way to go, and I would anticipate that we're going to be getting rejected on multiple resistances. So we have 42,000 as our biggest resistance, right? That's this purple line right here, and you can see that we had it a little bit as our support, then it flipped our resistance, and we continued to dump. So I would expect that as each resistance gets tested, we are going to have pullback. So I don't usually recommend shorting Bitcoin. However, given this market, if you wanted to make scalp trades, not financial advice, you could potentially short each one of these resistances, but keep in mind, we could be looking for the bounce at any point. So what am I looking for specifically? This is exactly the trade setup that I'm looking for. And when this happens, this is when I am going to be, entering into more long positions. Right now, I'm sitting sort of on the sidelines. I've done a few small scalp trades, very small, very risky. I wouldn't recommend them. But the one that I think we need to look at is this resistance right here at around 38,000. It's 38,645. And you can see right here, we had a test right here. We had some huge accumulation again. We had multiple tests again here, and then we fell below it. And you could see that right here, just in the past day, we've actually wicked up to it multiple times on the hourly chart. So if Bitcoin does continue to break down, then we'll have to reassess the situation. If we do break to the upside, what I'm looking for, and obviously this pattern could change, but what I'm essentially looking for is a break up somewhere here. And what I want to see is a retest again of this critical zone where we had resistance, right? And support. And what I want to see is I want to see Bitcoin to have that bounce off that level. And if Bitcoin can bounce off of this level right here, that is where I would personally be looking to start entering into my long-term positions again, because this would show me that the markets are recovering, albeit very small, somewhat insignificant in the grander scheme of things, but this is sort of the silver lining of the cloud, so to speak, right? So this is the level that I'm looking at right here. Obviously, if you guys are looking to do this, you can do this over on things like Bybit or Femex. If you want to know how to do this safely, profitably, and responsibly, you can check out my tutorial popping up above. Obviously, right now, it is turbulent times, so this is just what I'm personally looking at. I would never tell you to do something just because I'm doing it. But for me, right here, it's a bit of a no-trade zone because you're kind of catching a falling knife. You're sort of guessing where the bottom may have been. Now, some people think this was the bottom. Very well, it could have been the bottom, but we need to build more of the structure in the market before we can just make these, blanket assumptions that the market has made a full recovery, because the truth is it has not made a full recovery. Obviously, you can tell that by the fact that we've put in lower levels today. Now, you can see right here, there are lots of resistances ahead, and there are lots of different trend lines that we can look at. And even in black swan events, you still notice that Bitcoin does still play into these levels, right? But the problem is that we have this critical resistance right here, as well as this support flipped resistance right here, which is really making this $40,000 level just below the $42,000 flip very, very critical. I don't see us blasting right through this at any time. I am expecting a struggle. I am expecting it to be bulls versus bears. But as I said before, lower term timeframes on the hourly, going back over here, if we can flip this right here, this level where we had this, accumulation support, this resistance, if we can have some kind of a move above it, a retest, and then a bounce, I would certainly become short-term bullish again, and I would, like I said, look to enter those longs again. Until I see that happen, I'm just going to have to play it by ear. I'm just being realistic, guys. I don't want to, fill you with a bunch of hopium, and I don't want to make this channel all about FUD. We're here to look at the charts. We know that long-term Bitcoin's going to do fine, but I just want to let you know exactly what I'm doing. Now, interestingly enough, like we had Carpe Noctem point out, if you kind of look at the ultimate macro for Bitcoin, we're really just testing the center heart line of a giant multi-year trend, right? And that's the thing. We do know that historically, Bitcoin does move in these 4-year cycles. It would seem a little bit odd for this to be the top, for Bitcoin to just sort of end right now, right? So it could be possible that we just have a slow grind, kind of boring price action. And this is what I said, they're going to freak people out with the dump, and they could even bore you, with a month of this sideways movement where people are just like bored out of their mind. Their portfolio's been down for 50%. And then that's when they just capitulate. They sell, and we all know what happens after that. That's when we have these massive 50, 70%, 100% rebounds, right? Now, I do want to give a shout out to Tim Kugler. He actually sent me this email. And he said, I was looking at the stock to flow. He's a CryptoZombie community member. Thank you for this, Tim. He says, I was looking at the stock to flow. At this exact time in the last cycle, we were the same distance below the stock to flow value. Last time we took 1 month to go up 50%, then it dropped and did it again. 50% in a month before the blow off top. And if we actually blow that up right here, the stock to flow model has been a very, very accurate model in predicting these Bitcoin price movements, right? And you can see right here, we're only in the orange zone. And you can see that we did in fact have that deviation off the stock to flow, not only once, but actually twice until the peak of the 2017 bull run. And having a look at where we are right now, although this does look scary short term, when you zoom out and you have a look at this chart, hindsight being 2020, of course, it doesn't really look like this is the top. It just kind of appears like we're putting in something like Bitcoin has put in before. And, like Lark Davis pointed out, and I like this analogy. I like when we put it in terms that, regular people who trade stocks can understand. He says, Amazon is too volatile, must be a bad investment. Or is it a fundamentally strong company which should have been accumulated on the dips? And I really like this chart because you can see Amazon actually had a 95%, my friends, correction in 2001, followed by a 57% correction, 2005 to 2006, and then a 65% correction, 2007 to 2008, followed by a 33%, a 30%, a 34%, and a 37%. And this is Amazon. This is arguably the largest e-commerce, website in the world, and even that's not safe from these scary, scary dips, right? But the one thing I do want to point out, and obviously a lot of people were disagreeing with me, I'm just letting you know from experience what I've seen and how I feel about the charts. I said that, in my opinion, Bitcoin dominance was going to have a rebound. We needed a flush of these shit coins. And once again, when I say shit coins, you know what I'm talking about. I'm not talking about Ethereum. I'm not talking about, things like Cardano or things like Chainlink. I'm talking about things like Shiba Inu. I'm talking about things like MILF token, okay? Things like that we were having these TikTokers rushing in, buying up all these just horrible, horrible projects. We needed a flush. And as you can see right here, Bitcoin dominance has continued to go up since my previous video. And I anticipate that Bitcoin dominance is at least going to minimally get to the bottom of this blue zone to about 50%, which means that for everybody hoping that the altcoins are going to have these insane, massive price pumps, well, unfortunately, that may not be the case right now. I think that the altcoins had an amazing run from the 63% dominance all the way down to the 39% dominance. And as people flee from the more speculative assets, they move into the least speculative. In this particular case, the least speculative would be Bitcoin. Of course, we know Bitcoin in its own is a speculative asset, but it is the least speculative asset, right? Now, some people were, really worried about whether or not this was the top, if they should have sold, etc. Well, I just actually want to open up the BLX chart super quick because there's one thing I wanted to point out. And if we actually go, and this is worst case scenario, by the way. My dad was asking me, obviously, you guys know, he holds a lot of Chainlink. He's looking at his portfolio. His portfolio's down like everyone else's, 50%. And, having a look right here, you can see that even during the top right here at the Bitcoin, the previous Bitcoin bull market, when we came down from top to bottom, right, at the peak, we actually had a 45% drop. Now, this did mark the end of the bull run, but it wasn't the time to be cashing out if you missed this dip. You could see that Bitcoin actually, and altcoins as well, from bottom to top here, actually had a 57% pump before entering the terrible, terrible bear market. So the point that I'm trying to make is that even if you think this is the end, even if you hypothetically say that's it, it's time to go into the 3-year bear market, which I don't actually think that that's the case yet, there minimally is always an exit pump. That's what they call it, an exit pump. And it's sort of, you've seen the Wall Street cheat sheet. It's it's a lower high on the macro after the bigger macro high. So you put in the first macro top here, you come down, you put in the second macro top, you put in a lower low, and then that officially marks the end of the bull run into the bear run. So essentially what I'm trying to tell you guys is if you're thinking about selling right now, I would be a little bit skeptical because I do anticipate that even if worst case scenario, this was the end of the run, which I don't think it is, I still think that we would have at least another 50%, maybe even 100% bounce from these levels, where then if you were considering exiting your position, at least then you could profit a little bit more gains than selling at the bottom right now, right? Because once you sell, you've sold. That's it. It's over. It's done with, right? You've actually sold. Whereas now you're only down on paper. Right? If you haven't sold, you still have your coins. So that's something that I just wanted to point out before we moved on. Now, of course, we are having the China FUD for the 100th and 12,000th time. I mean, seems like every time, the China FUD comes in to kick you when you're down. This is nothing new. This news is, somehow being brought up again by these media sources as if it's some brand new thing that we don't know about. But essentially what has happened is Finance Committee under China State Council said that one of its upcoming priorities, including crackdown on Bitcoin mining and trading activities, they said, while it remains to be seen whether or how such comments will be executed, the news appeared to have spooked some local traders and miners. Now, we do know that they've already had a crackdown on ICOs. We already know their stance on Bitcoin. You've also seen FUD coming out from Hong Kong, etc. But what's interesting is, Coinmetrics co-founder Nick Carter says that he's actually happy that China authorities are calling for a crackdown on Bitcoin mining. And it's pretty funny because, first we complain that, Bitcoin is centralized and there's too much mining in China. Then we hear that there's a crackdown. And now all of a sudden that's bad as well. So it's like, you got to pick your side here, guys. Well, this is what he went on to say. He said China first banned Bitcoin trading in the issue of ICOs in 2017. He believes that this new move from China could actually strengthen the Bitcoin network and improve its energy efficiency. This isn't a surprise. This is a continuation of what had already begun. Mining was already banned in the province of Inner Mongolia, which is heavily coal-powered. Is this a good thing or bad? Well, people like me have been asking for this to happen, anticipating it. I was looking forward to it, and I'm glad it is happening. First of all, it reduces China's ability to potentially influence Bitcoin. There was an outside chance that at some point they would use the China domiciled hash rate to launch an attack on Bitcoin. This wasn't something I thought was very likely, but now by continuing to ban mining in China, they're not going to have the leverage or ability to do that. He also says concerns that Bitcoin will be less secure if a significant number of Chinese miners go offline are unfounded, but he replied to that saying, is there going to be a situation where Bitcoin is less secure? Well, not really. Bitcoin's security doesn't really increase with a single marginal unit of hash rate. Bitcoin is overwhelmingly secure. It's secure at many thresholds. Even if hash rate would drop by 50 to 80%, it would still be considered secure. The worst that would happen if hash rate goes offline, blocks might be slower for a week or two. And we know that this is how Satoshi designed Bitcoin, right? If a bunch of miners decide to just drop offline, we have the adjustment, right? And yes, arguably, this could be a problem short term, right? It might take a little longer to send Bitcoin transactions, but at the end of the day, the difficulty would adjust, even though the hash rate comes down a little bit, and then it would go back to the security that it had before, right? And this is built into the protocol. This was something that was thought about 12 years ago, even before the Bitcoin Genesis existed, right? And, you can see Michael Saylor, he chimed in about it. And he said a crackdown on miners in China would radically reduce the carbon footprint of Bitcoin mining, increase the profitability of all the remaining Bitcoin miners, reduce nagging China FUD, support progress towards our ESG goals, and drive up the value of Bitcoin. We should be so lucky. In fact, if you guys remember, about a month ago, we had the mayor of Miami saying that he would love to actually have, the city of Miami participate in Bitcoin mining because they would be looking to do it in a clean and energy efficient way. And this has been one of the big FUDs, right? So that's something that I just wanted to point out. And it was actually interesting. Barry Silbert said, what if there was one company that was behind most of the Bitcoin energy usage FUD? Now that would make for a sensational story for somebody to write. And Meltem Demirors responded with, starts with RIP, ends with pull. Ripple. They also spent the most on lobbying the last 3 years. Obviously, this is speculation. We don't know. Not going to chime in on any more than that. But to keep this video nice and short and sweet, I do want to just play a clip from this video from my good buddy Crown. And this is something that I think is really important, especially if you're new, if you found yourself in an over-leveraged position, if you're feeling the pain right now. We've all gone through it. We've all made mistakes. I've made mistakes. Nobody is perfect when it comes to trading, when it comes to investing, when it comes to buying shitcoins. We've all been there. And I definitely want to play this clip for you.
Okay, basically, what did I learn from losing a shit ton of money? It's always painful as fuck to talk about, man. It doesn't get easy over time, I'll tell you that. Okay, so if you're not familiar with the story, basically I blew out my whole fucking account about 2 to 3 years after I became a professional trader. It was maybe the most emotionally devastating experience I think I've ever gone through, being completely broke, like literally actually no money, like actually no fucking money. So the way that I got into that first and foremost is, well, as you apparently had experience as well, I did not follow my plan. I thought that I was smarter than the market. I thought that I knew more. I thought that because I had been getting mentorship from, some very successful traders who have been doing it for 30 to 40 years, 2 guys especially, I thought that I, had this special skill and I couldn't be wrong. And I was having a lot of success, which played into that. So what always happens before the great fall is like what the Greeks called hubris, right? You think that you're better than what you are. And I think it's like in a religion's context for that. So maybe not the best example there. But my point is that you basically get your ego gets inflated in a sense because it's very difficult to do that when you're in a mid to low 20s and you're making like what is big money to you at the time. And then what happens after that? The market pulls down your pants, Bear Jesus comes inside of you and says, have a shish kebab in your Angus to your mouth hole, sir, and enjoy. And the problem is that that's always, you can count on that happening again, Mr. Solverine. I can assure you of that if you do not learn the lesson. What is the lesson? The lesson is under no fucking circumstances ever do you deviate from your plan. Always have risk management. And now I know you personally, so I know that you do have like an actual plan. Problem is when you don't follow it, that's a plan. That's not a plan. It's just fucking words on a paper. So what I learned from that is that I can have more or less what I want when it comes to trading, but that comes with the responsibility to be adherent to my plan, which sounds easy enough. Problem is, when you're an emotional fucking mid-20s guy, you're not gonna, you are emotional. You're the bitch of the world at that point. You don't really like come into emotional maturity until your late 20s, I think, as a guy. I think girls get into emotional maturity like earlier. They probably get into their teens because they just get more experience earlier, I think. But that's a whole nother discussion. Anyways, for guys, especially in this day and age, with the way that we're kind of raised and conditioned, I do think that unless if you have a self-imposed sort of like rite of passage earlier in life, it's going to come out in some other way. And, we have like problem creep as well, which, fuck, why am I getting into this right now? But basically, even though we didn't necessarily have the same issues as, our ancestors, like, what is it, hundreds of thousands, maybe even millions of years ago, we still treat our issues today as if they are of the same severity, like, as running away from a fucking lion. If you lose your whole account, it's rattling. It's going to absolutely destroy you. So anyways, my point is that first and foremost, the lesson is do not deviate from the fucking plan. Now, again, I know you, so I know that your plan is actually solid. For a lot of people out there, your plan might not be solid, so this might not apply to you. That is an assumption that I'm making right now. If your plan is solid, then it's just a matter of following your plan. And that means that you understand what trading is in its essence. It is a game of statistics and probabilities. You cannot be 100% perfect. I have never seen someone be 100% perfect over a long period of time. I've seen some people do it for, a month or a few weeks. I think a few people in the Discord could probably come up with a few examples for that. But over a long period of time, I can assure you, I've never seen it not once. I guess maybe it would be naive to say that it can never happen, but I have not seen it in my lifetime. So that means if you can't be perfect with your trading, you need to have a plan for what happens if what you are looking for does not work in the way that you are, well, postulating, aka a trading bias, if you will. That's why risk management is so important, because you can be 99% perfect, but on the 1% or even not 1% chance that you are wrong, it will be a career-ending decision, or can be a career-ending decision. So that is the lesson. There is no deviation. You are responsible for following that. That is what it means to be a trader. If you cannot do that, you will never be long-term successful. It can't be done, because at some point, a black swan event, a 10 sigma fucking event will happen, and you will lose a lot, or maybe even all. And it's very difficult to come back from zero. It can be done, yes. But the better option is to just never fucking get there in the first place, to be honest with you. You don't need to do that. And if you are, and now I'm not speaking to Solverine here, but anyone else who might have been listening to that, if you are currently maybe learning, or you don't like have a solid plan in place, do not put real fucking money at risk. Trade a demo account. You can get great experience there. Yes, it's not going to feel the same as when you actually put real money at risk, but at least you can see the statistics over time. And naturally speaking, as you get more and more experience with that, as you get more and more familiar with it, your emotions will quiet down as you become progressively desensitized to that stimulus. And as you do that, you'll recognize, oh shit, if I have a 69% chance to win this trade versus a 31% chance to lose this trade, does it make sense for me over time to get excited about winning or losing? No, it doesn't. It fucking doesn't. You don't get excited. You don't get surprised about flipping a coin and finding out that over like 100,000 flips, 50,000 of them are heads and 50,000 of them are tails, or something similar to that. You don't get surprised by that. It's the same thing. So you need to get that progressive desensitization if that, if you're on that side of the scale as well. So end that talk right there.
So that's it for me today, guys. I hope you really understand that as long as you're learning from your lessons, it is all right. We know that Bitcoin is the honey badger. We know that long term it is up only, but we are going to hit bumps in the road along the way. And if you believe in it, you should have no problem hodling. If you're scared right now, then maybe you did invest more than you were willing to lose, or you may be in projects that you were only in for the quick gains. But for me, as a long-term Bitcoin hodler, yes, of course, this phases me. I'm not going to say it doesn't, but long-term, it doesn't shake me on my views of Bitcoin becoming the world reserve asset that it deserves to be. And that is it for me, guys. Thank you so much for coming back to the channel. You guys rock. I love you. You're awesome. Stay safe out there. And of course, if you haven't seen these videos popping up right here, right now, check them out. And until next time, stay crypto. And of course, peace out.